today. This webinar is going to be streamed live. We're going to be, everyone is going to be viewing us on the Zoom, on Facebook, on YouTube, and on Instagram. So I want to say thank you to everyone who has joined us from whatever channel that you're joining us. Today, we are going to be talking about a very, very topical issue. That's the unification of the Forex, market rate. We're going to be talking about why the window even existed in the first instance. We're going to be talking about, the need for the rate unification, how this is impacting small businesses, especially for those who are in the export and the import business. And we want to ask and enjoin that every one of us, that you drop your questions, and please be assured that all of your questions will be addressed. My name is Ayo Dele Olojede, and I'm the divisional head for retail and SME for Wema Bank. And I have the pleasure of our guest who will be doing justice to this topic today in the presence of Kenneth Erikume. So I'm just going to read guest speaker's profile. Our guest speaker, once again, is Kenneth Erikume. He's a partner at PwC Nigeria, where he leads the firm's tax reporting and strategy in the West market area. Kenneth's diligence and tenacity has seen him rise up the ranks from novice to expert in all things tax. He is a graduate of Applied Sciences from the University of Benin. He joined PwC in 2004 and has been with the firm for over 18 years. During this period, he has become known for his expertise in tax compliance, in tax advisory, tax audits, and strategic tax consultancy services for clients across Africa. Kenneth has spent 18 months as an tax manager at PwC South Africa in Johannesburg, where he was one of the pioneer members of the PwC Africa Desk. Kenneth is a fellow Chartered Institute of Taxation and the Institute of Chartered Accountants of Nigeria, as well as a member of the Association of Corporate Treasurers. Welcome to this program today, Kenneth.
Thank you, Ayo, for that very fantastic introductions, and I'm looking forward to engaging our attendees today.
All right, great. Kenneth, on the 14th of June, right, the Central Bank of Nigeria, they announced the unification of Forex windows, and they announced the reintroduction of a willing buyer, willing seller model. Now, this has become quite topical, and of course, for obvious reasons. And they say that when you're discussing Forex market rate, it sometimes feels like you're trying to predict the weather. Now, with all of the talk about the convergence of this rate, everyone has become some sort of an amateur meteorologist for the economy. So we'd like for you to share with us your insight onto why this multiple exchange rate, why they even existed in the first place. And is this unification the right move for now? Thank you very much.
Thank you, Ayo, for that important question. I'm happy you didn't ask me to predict where the rate will land, because that is what a lot of speculators are wondering about right now. And in PwC, we don't predict, we speak to trends and allow people to make up their minds. Now, having said that, I like the first part of your question that, wants to look at why did we even have multiple exchange rates in the first instance? And we even had multiple official exchange rates at some point. And so people would tell you that if you needed to import goods for manufacturing, there's a rate. If you needed to travel for religious activities, there's a rate, and so on and so forth. Now, the reason we had these multiple exchange rates was for a number of reasons. One of them is to manage, well, the central bank manages the foreign exchange reserves of the country. So these are assets and foreign currencies that the central bank holds in other jurisdictions. And when there is no controlled rate, there could be depletion because the central bank has to respond to demand for liquidity. So the central bank was looking for, at the time, was looking for a way to use the different windows to allocate foreign currency to different sectors of the economy, with particular focus on what we call priority sectors, where essential imports, like the guys who import raw materials to manufacture, were prioritized, as against someone who wants to pay for invisibles like pay out dividends. So it made sense because we had the FX liquidity challenge to prioritize one spectrum of the market over another. Another thing that the government was looking at the time was to control inflation. FX, because we are largely import-dependent economy, the FX depreciation could contribute significantly to inflation. So if, for example, the rate moves, as you've seen with the fuel price, where the rates have moved, from 750 is moving to 800 and so on, the price of the imported petroleum products have to be adjusted to respond. And that has inflationary impact because that price would cascade down, to other items that are consumed locally within the economy. But the way it was implemented was really the challenge. The implementation was not great, even though you have all these valid reasons for you to have those, multiple rates. Because what we discovered is that even the priority areas, and we were discussing with manufacturers at the time, they did not have sufficient FX. Many people will tell you the FX allocation they got was 5%. If you're very good with having multiple banks and multiple relationships, maybe max 8%, right? And that arbitrage, that lack of availability, meant that the rate began to expand between the official rate and the parallel market rate. So it made sense, for someone who's looking at profiteering to hoard the FX, and use the FX in non-priority areas where they can actually get higher rates for their FX. So this led to a vicious cycle, and that gap extended, and then the rates between the official extended significantly. So that gap existed. Now, with the harmonization or the unification, I think it is going to be very, very important. I think it's the right move, first of all, because every country has the official rate and what we call the alternative channel. In Nigeria, we call it the parallel market. But the spread is not so, the difference between the two is not so significant, right? And that is what this unification is supposed to address. When you have that, you would have more confidence for foreign investors to bring in their investment. I was having a conversation with a very big French multinational that wanted to set up a plant in Nigeria last year. One of the reasons they put a stop on their investment was because they had no clarity on how to take their money out. And if they bring in their money and get a certificate of capital importation at, say, 460, when they want to take it out because of FX liquidity challenges, they might have to go and source it at 750. So it didn't make sense with all the uncertainty to bring it in. Now that we have the unification, there's a lot of confidence in the with foreign investors to bring in those funds and make those material investments in the country. Now, having said that, it's not just the unification that would work. We need a comprehensive strategy as a country, we need to deal with our significant source of FX, which is crude oil, to ensure that that flow, that liquidity is maintained. We also need to deal with some of the leakages on our FX, for example, petroleum products. So if we can get, the Dangote refinery on stream and get some of our refineries working, that would reduce some of the pressure from paying out remittances to import petroleum products. And of course, we need to look at the other sectors of our economy where we can get competitive advantage. For example, agriculture and outsourcing, human resource outsourcing, where we can actually have, people, because we have a unique situation in Nigeria. We speak English, we speak good English, we have a large, young population, we have educated population. So we can set up, outsourcing hubs to provide paralegal, call centers and things like that to the global, value chain. So these are some of the things I think we need to do in addition to harmonizing the rate.
Wow, thank you very much, Kenneth. That's been a lot of insight that you have provided there. And, in the course of, your the conversation, you did mention all of the problems that the multiple windows that we were operating before now that we were solving, liquidity, inflation, and now that we have this unified rate, does it mean that all of those problems have disappeared? Now, I say that because some macroeconomic analysts argue that the lasting solution to economic stability and to growth in Nigeria is that we promote domestic manufacturing, production, rather than a unified rate system. What would be your take on this? Thank you.
100%. I sort of touched on it when I was trying to address the first question. You cannot have the unification without dealing with other issues in other areas. And I mentioned some other things, but you touched on, domestic production and manufacturing. Now, that's a very complex issue. And the reason why it's very complex is for you to be, to play significantly in industrialization and manufacturing, it means that you need to deal with inefficiencies in terms of infrastructure. And in Nigeria today, we have significant infrastructure challenges in terms of power, in terms of transportation. And when I'm talking about transportation, I'm talking both domestic transportation and, port facilities for exportation. So those things, I don't think from a national perspective, we have the competitive edge at the moment. And that's one of the reasons why it took us a long time to sign up to the Africa Continental Free Trade Agreement. Because if you're signing up to an agreement where you're saying that Nigeria becomes a common market with the rest of Africa, but you're playing with the likes of South Africa, Morocco, Tunisia, and so on, that are very strong in terms of industrialization, your pricing may not be competitive in that common market, right? So I think, the government appreciates these challenges and they're doing some work around that. In order to unlock it, finally, I think we need to do a few things. We need to incentivize more manufacturing and production. We need to see how we can mobilize our gas rather than relying on foreign imports, imported petroleum products, imported gas to power our industrial sector. And that could probably deal with the energy challenge. And then we take some baby steps in terms of transportation and our port infrastructure. Already, the Lekki Freeport has been commissioned as well. So that should take some cargo and free up some of the capacity challenges we have at the Apapa port. But I think even, mobilizing things like rail that connects the north and the south, the food baskets and, locations for consumption would be crucial. So without these medium and long-term strategies, the unification of the exchange rate will not be effective. But I think in the medium term, there are some things we can immediately do, right, to ensure that FX liquidity is there. And that is deal with the security issues and the oil theft issues with the crude oil that is being produced so that we can get them exported. At some point, I think in 2022, the production in Nigeria went below 1 million barrels per day. We can't be having that because, the price of crude went high and then our production was low. So in the short term, our main source of FX still remains crude. So we need to ensure that we deal with the security challenges, and that should help while we work on all these long-term strategies.
Thank you very much, Kenneth. Before I make any comment, I just want to encourage our audience that they please can drop in their questions, and I'll be taking those questions, at the end of the session, just to remind us that we can ask questions. Okay, so just to reiterate, you talked about the fact that now that we have unified the Forex market, what would work, for the economy now and the future is that the government comes up with medium and long-term, initiatives. You touched on the incentives for manufacturers. You talked about the need for us to be able to mobilize gas to power, the industrial sector, and you emphasize that there's a need for us to have baby steps initiatives to transportation around the port and creating more infrastructure. Thank you very much for those insights. Now, I want to segue this conversation into talking more about the business owners. Now, will the changes in the Forex rate system, will it have an impact on importing and exporting? What do businesses that are engaged in these activities, what do they need to consider, as they try to navigate the market today?
Yes, so the changes would have an impact, obviously. I think for exporters, it is a very welcome development. So what the exporters had before was, so under the, exchange, the CBN's exchange manual, you had to bring in your export proceeds within 60 or 90 days, I can't really remember, into the country through government approved channels. And you could only use it for eligible transactions, which meant that the exporters had to exchange it at the official rate in the I&E, right? Or use it, for their own valid FX needs. Now, if you were bringing in the export proceeds and converting it at 460, you wouldn't be getting as much Naira as you should have. And this was why the central bank was then looking for other incentives to layer on the exports, like the RT200, the Naira for dollar scheme, and so on, where they give you about 65 Naira for each dollar you repatriate. But that did not close the gap between the official rate and the parallel market rate. So these exporters were not incentivized, other than through law and regulation, to bring in their export proceeds through official channels. So they had to do it, but I'm not sure they exactly liked it. So with what we have today, with exporters, they're in very good position now, because one of the things that you will see with economies that have export strategy is that sometimes they look at they intentionally devalue their currency sometimes to boost their manufacturing and allow their products to be more competitive in the international market. So for exporters, I think it's a welcome development. The exporters as well, even with getting the normal standard proceeds they are now getting at a higher rate, they still continue to benefit from some fiscal incentives that are already in the law. And it's important that exporters continue to look at their business and see whether they are optimizing on some of these opportunities. For example, we have the Export Expansion Grant, where the government can give as much as 15% rebate to a company that exports its products, right? A manufacturing exporter. But if you're just an exporting trader, maybe you get 5%, but you get that rebate, from government in addition to your export proceeds. And then there is something in the Companies Income Tax Act that says if you repatriate your export proceeds into Nigeria and invest in plant machineries and spares and raw materials as well, that you will be exempt from companies' income tax. So those are some of the opportunities from an export perspective. For the importers, there will be massive challenges, right? So one of the things the previous exchange rates caused was hardship in terms of predicting the value of Naira they would need to source their products, which made it difficult for businesses to plan. That has not been totally removed, because with the willing buyer and willing seller scenario, while government is still managing its foreign reserves and still dealing with some of these structural issues, you would have some movement in the exchange rate, which would definitely make it difficult for businesses to plan. This is why you've been seeing some price adjustment. If I take the petroleum markets, retail sector as an example, from time to time, some adjustments in the price, in the pump price, to ensure that, their margins are not being eroded by the additional devaluation of the Naira. You would also see this in the power sector as well. And there have been moves by the discos to adjust their tariffs. And those conversations have been happening. So you would also see the higher cost of imports. And we are seeing this quite a lot in different sectors, and the inflationary pressure. So the government issued recently the inflation figures, and it was trending at 22 point something percent. That shows you that the FX devaluation impact is already being felt. And those challenges, I think they are there, but we shouldn't forget, that there are also opportunities, even for importers at this time. I think one of the things clearly that the manufacturing sector is very happy with is the fact that, they can just find someone who has the FX to, and then exchange it for Naira quite easily. And we've seen some of the opportunities being unlocked as well in fintech, in banking as well. So some banks now offer, immediate exchange of your dollar proceeds into Naira. So before, on my banking app, I couldn't transfer dollars to Naira. If I did that, it would go in at 460. So there was no reason for me to do that. But now you can actually, do that with your bank, and they would exchange it at a reasonable amount with you. And then all the fintechs and the payment service companies are also looking at opportunities there with remittances. And remittances is going to be a big part of the conversation. One thing we've noticed, me sitting here as a consultant, is that we've also seen significant remittances. So a lot of the people that have JAPAD are now more interested in investing in some of the local companies because they know, and even sending money back home to their relatives in the village or in town, because they know that those people will get it at the right amount. So these are some of the opportunities it opens up, despite the challenges.
Okay, thank you very much. I couldn't help but smile at the last sentence about Black people sending funds at home. I hope we're not encouraging more Jackpot. But anyways, yes, you've touched on very interesting points. You've talked about yes, for exporters, the welcome development, and I completely agree with you, fully aligned. And I would just maybe also just mention at this point that even for us at Wema Bank, we're beginning to do coming up with a lot of initiative around opening up market access, not just locally, but also supporting our SMEs to be able to access opportunities even internationally. We're having conversations around how we can help them to sell directly on Amazon. And of course, to the point that you made about the fact that when they bring in their dollars, they can get it at the correct rate. So the opportunity we have today is one for that is for exporters. And as bankers, we are very well positioned to be able to support all of our small businesses that are in the exporting business. And of course, for the importers, massive challenges you talked about, the fuel issues, the high cost of import, but it's not all doom. You mentioned a word which is very operative for me, planning. One has to become more disciplined around how you plan, for your input, what engagement that you're having. Maybe if you've been very heavily invested in importation, you probably need to also begin to look at some backward integration opportunities, maybe locally, to be able to help cushion the impact. And yes, you're right. We're offering immediate exchange, like you said, you want to be able to, transfer funds now, you can do that directly from your app. In Wema Bank, we're even the first to even launch the use of cards to be able to make payment internationally. I'm sure you're not going to escape a lot of questions around some of these massive challenges that the small businesses are facing at this point in time. You've touched on some of the other questions that I wanted to ask you around the opportunities and especially how SMEs can protect themselves. I think I need to ask you this one actually. How can SMEs protect themselves against potential currency fluctuation? And how can they manage risks under the new unified forex rate system? I think that then becomes very pertinent in view of the insight you have shared about the massive challenges. Thank you.
Thank you. Thank you very much, Ayo. And this is, I like it when my host also, provides some thoughts as well. So thanks for that. But I would touch on something which you mentioned, which is the backward integration strategy. So this is one of the ways I think SMEs need to look at managing their potential risks. Now, you look at your inputs and you analyze your inputs. What do I need to ensure that I deliver my products to my clients? So if, for example, I manufacture biscuits or I manufacture water, water, all the inputs are local, except maybe the manufacturing plant. But if I'm manufacturing biscuits, are there opportunities for me to substitute some of my inputs with local products? And what are the fiscal incentives that are available to me if I do so? So when you substitute with a local product, you're able to manage some of the FX shocks that your business would normally face, right? Because you've substituted with items that you can source for locally. And I've worked with some really big multinationals that have global supply chains that are even looking at this. So it's germane, not only for SMEs, but even for big corporates. Okay, so that's one. The other bit is the fiscal incentives. One of the things I've noticed in Nigeria sometimes is the lack of education on the tax incentives that are available to businesses. So for example, if you set up a plant that you are involved with backward integration, where you source for the products locally, the government actually has an import duty exemption that they can grant to your business if you are bringing in the plant and the spares for that manufacturing plant, as an example. So apart from being able to deal with the FX risks with the input, you're also able to optimize by saving some money from your manufacturing plant or from the spares and so on that you bring in. So for me, I think that is one of the things we need to do. Backward integration, substitute inputs, and also get some benefits from tax incentives. The other thing you can do as an SME, and some of these things are textbook, but you may need to engage your bank to see what products they have, is that you can, work with, hedging the foreign currency exposure by taking up derivatives with a bank or with a counterparty that's able to offer that product, such as forwards and futures. The challenge we used to have historically, and I don't know whether this has been dealt with by the banks, was the pricing for some of those hedging products. They were a bit prohibitive, which meant that only the big companies could afford it. And many times, even the big companies used to run away from it. But those hedging products are available, and you can agree those products at a particular price with the counterparty, in this case, which would be the bank. You can also hold some foreign assets. That's also a possibility, depending on your scale. So I wouldn't think small or micro companies can do this, but when you're beginning to become medium, a medium enterprise, you can begin to hold some foreign stock. So even Nigeria as a nation holds some foreign currency position. And this could be anything from cash to gold to foreign stocks, such that you diversify your asset portfolio through that way. So while you're having the exchange losses, if there is appreciation on the other side, you'd have the exchange gains, which can offset. And then the final thing, obviously, which I think I mentioned before, is also even diversifying your income so that you're not reliant only on one source of income. And this is both domestic and foreign. So one of the things you need to start looking at, especially with the Africa Continental Free Trade Agreement, is how you can begin to look for those markets externally. And I already mentioned it. The bank is looking at products where they can engage their customers and look for those opportunities out there. So if you put up your item on Amazon, for example, and it is sold in the UK, it's sold in South Africa, you're able to earn some foreign exchange from those sales. And when you bring in the proceeds, you're getting it at a good value. You can even bring it into your DOM account and it sits there and it protects you. So, but even locally, right? Because some income could be at risk just because of the high inflationary pressure and how much you can pass on to your clients. Are there other things you can be doing in that space? So if, for example, you're a real estate developer and the price, because of global supply chain challenges, the price of some of the foreign materials are now prohibitive. Can you, using the skills which you already have in-house, pivot and begin to provide facilities management services, which comes at low cost? It's high skill and high margin. So can you diversify even locally, domestically, your income profile as well? So those are some of the strategies, I think. And as you would rightly identify, many of these strategies, you need to engage a bank, that understands how your business and is able to support you as you make some of these strategic decisions to change some of your processes, your income, to hedge your products, and to diversify your asset portfolio. That's it, Ayo, in terms of my thoughts around that.
Thank you very much. Very, very pertinent thought around what it is that small business owners need to do, and especially how their banks can support them. So all of those solutioning that you talked about, Wema Bank is very well positioned to be able to support in providing those solutions. You talked about the fiscal incentives, and what struck me was the fact that you said there's a lack of education. So which is the fact that there are some solutions, but a lot of people are not even aware of that. And I guess it's one of the reasons why we're having this engagement, to be able to let people know of opportunities that are available to help them to be able to cushion the massive challenges that they are currently going through now, and help them with cost savings. And then the opportunity to diversify income, and the opportunity to also think about how you can package your business to also be able to sell internationally. There's nothing that says that you can only, or you should only sell locally, and you need to be able to partner with an organization like Access Bank that would help you to give you that required exposure and help you to be able to continue to, at least at the very least, maintain your your margins. So I have a lot of questions here, and like I said, that a lot of them highlighting some of the challenges that the businesses have been facing since the announcement of this unified forex market rate. So I would read one that has, it says, anonymous. Since the announcement of the floating of the Naira, MSMEs have been suffering, especially for businesses that depends on importation of goods through the Form Q. Even though the Apex Banks has directed all banks to still spearhead the Form Q, it says, well, okay, so this question is for me then. Wema Bank is yet to commence. I would like to know when the bank would commence selling Forex to MSMEs. I think I will just respond quickly to that. There's never a time when banks have stopped. Maybe the model, the approach is different now. I mean, with the unification, you still need to be able to complete the form on the TRMS portal, submit it, include your tax clearance certificate and a letter indicating the bid amount, because you have to bid. The new model now is the willing seller, the willing buyer, willing seller. So you have to bid to be able to get that. I would also ask that you send an email to the SME Help Desk. I'm sure if you look in the comment section, you will see an email. Please send that in and we can help you for that. Thank you. Okay, another question here. It says, this is from Bashir Abubakar. It says, I've got a question, though we don't, sorry, I'm trying to, the sentences are not clear. We ordinary individuals have access to buy foreign currencies in our own country. I mean, it's an individual right, but the banks don't allow us to buy the currencies, rather they will take from us. It's not fair from my own point of view. So I guess some of these things we have already touched on, that today you have the opportunity to be able to take, buy currency even from your app. Banks are beginning to announce that you should just go to their app, you can buy currency. That's one of the opportunities that the unification has provided. Kenneth, it seems that the questions are more for me. Okay.
It's okay. It's okay. you take some of the burden from me, so it's fine.
All right.
But maybe I should just add to that question as well, right?
Okay.
So I think that the banks also have some restrictions on what they can sell dollars for as well.
Yeah.
So when you can just walk to the bank and say, I want to just take Naira, give me dollars. Sometimes, they would have to ask questions. What do you need it for? Is it for paying school fees? Is it for paying for services and so on? So it has to be an eligible transaction, for the bank to do that quick exchange. Now, if it is not an eligible transaction, then you probably have to go P2P. So look for someone who needs Naira. Someone who needs Naira and you need dollars, and then you find the right price to do the exchange. So I think that may also be the challenge with I think it was Bashir's question as well. So we are not fully, we still have exchange control in this country. So we are not Kenya, where there's no exchange control. We are not United Arab Emirates in Dubai, where you can just do dirham to dollars and anything goes. So we still have some exchange control, and that means that there is still some documentation the banks would need from you, to process some transactions. Yeah.
Absolutely. Okay, so I have two questions now for you. So it's one from Chukuma Onyabo. What are Kenneth's comments on entities getting USD at the I&E rate and selling on the black market? So I'll take two questions so you can take them together. And then the second one is from Akiyemi Benga. He said that Kenneth mentioned signing of the trade fair zone with other African countries. Please, what are the benefits to the country? So those two questions for you, Kenneth.
Right. So buying from the I&E and selling in the parallel markets. I think this is what the old system, the system that was not well managed in the previous FX regime, where because of the significant arbitrage, there was a massive incentive for you to reallocate FX proceeds. But if you go to the I&E and you source for dollars, it would be for eligible transactions, which means that you would have documentation that you provide. It is not different from saying you do, what they call this thing, the one where you travel and you get a travel certificate, a travel ticket, and you get your passport with a visa, you take it to the bank, and rather than travel with the FX, you now sell it off, and then you cancel the ticket. Those are not exactly, I mean, I'm trying not to use the word that they are illegal, but that's what it is. It's illegal actually to do that, because you've said, I want to import it, so you've raised the form Q. You said, I want to import an item. They give you the dollars and then you divert it somewhere else. Or you say you want to travel, you get the dollars and you divert it somewhere else. So those are criminal. And I think if the CBN picks it up, they would raise some issues, so the EFCC will come knocking very quickly. So that is not encouraged and it's not the right thing to do. So what you can exchange privately is what you have not sourced from the official channel, right, with valid documentation. So there is nothing in the Nigerian law that precludes you from FX that you have from exchanging it with someone who has Naira. And this also moves to digital assets as well. So, but I know that there is an embargo on banks facilitating transactions in crypto. But the Securities and Exchange Commission has come up with some guidelines. And I think the CBN and SEC, they are working on trying to harmonize and come up with a proper policy. But, if you have crypto and you want to exchange it with someone privately, There is no law that actually prohibits you from doing that. And I think the CBN has come up to say that several times. But don't take dollars that is meant for importation of raw materials, or take dollars that you have processed for travel and then exchange it privately because you're getting additional Naira margin.
Okay, thank you very much. A question here from Olariwaju. What is the effect of the unified rate on investors who are willing to invest in Nigeria?
Okay, so first of all, it's the certainty. Nigeria as a market, and I'll go back to that second question on the Africa Continental Free Trade Agreement. I sort of lost my train of thought there. So the certainty it brings, the unified rate brings, with I as an investor bringing in my funds at a particular amount, and I know that I have liquidity to take out so if I put up a plant, you know that there's an incubation period for it to get to profitability. After the construction, I have to sell for a while, increase my customers, and then start breaking even. And then at some point, I will have profits to declare and declare a dividend. So it will take some time. This unified rate gives the investor assurance that when they bring their money in, today, in 5 years' time, they can actually wait for that incubation period. In 5 years' time, they will be able to take their money out. And it will be dictated by market forces. The problem they had before was they couldn't tell. Investors are happy to leave their fate to market forces. They are unhappy when there is restriction and regulation, and then they have no clarity. So I think that this removal of the uncertainty is one of the massive, massive changes. And if you were reading the foreign press immediately after the announcement, it was only positive things they had to say about the move. At some point in time, and this is me trying to avoid prediction, the FX liquidity will improve significantly. I suspect, and this is not prediction, I suspect that there'll be a different movement in the exchange rate at some point. And this is the expectation. When you get the FDIs coming in, and then the crude production is stable and we get that exports there, the exchange rate could reverse. It could well reverse. And investors are happy with that. For the Africa Continental Free Trade Agreement, what benefits are there? When it is fully implemented, the first thing that you'll be able to do is that you'll be able to sell your product, because the Afrexim, they've come up with a platform where if you sell your product to someone in South Africa, the person in South Africa will pay you and you will get your income in Naira. Okay, so they've set up that exchange. So all the central banks and the reserve banks in Africa have plugged into that platform and they've piloted it, so it's ready. So you don't have to worry yourself. You would actually get your Naira proceeds, right? The other thing is that it gives you one common market. So today, your market is Nigeria, right? When the Africa Continental Free Trade Agreement is fully implemented, that comment that Nigerian businesses don't succeed in South Africa because of regulations against foreigners and all those things, it will not happen, right? Because there will be clear, in fact, there are clear rules already in place around non-discrimination. So you will treat a Nigerian business exactly the same way you treat a South African business, and vice versa. And also, your products will not be discriminated against on the basis that it is from Nigeria or it is from South Africa. Goods will be able to circulate across the African market free of restriction, free of discrimination, except it is a prohibited item. So countries still have items they can list as prohibited items, maybe firearms, dynamites, of course, illicit drugs and so on. Those will continue to be prohibited.
All right, piggybacking on what you said about Nigerian goods being treated and priced the same way that you would, any other business or goods and services in South Africa would be. There was some news just a couple of days, if wasn't just yesterday, that you can now export to the UK market even in the local currency. Did you see that?
Yes, yes. So this is one of the moves by the UK government, where they have recognized, naira as one of the currencies for exchange. So this actually allows us to, trade freely with the UK, and our currency would be recognized. So now you know that the naira is not a hard currency. So when you travel and you pay someone in naira, it's usually not recognized, right? But with UK products, with this intervention, and we need to see the implementation, it will mean that your naira will be recognized as a valid means of exchange when you need to import a product. So that would also be quite nice, and we need to negotiate more of those agreements.
Exactly. So I think there's one here that it's for you specifically. It says that you spoke a lot about tax and fiscal optimization. Do PwC have an SME pocket-friendly advisory desk? Because most of the time, only the big firms can access most of the needed experts to do this optimization. So Kenneth, that is a call to action for PwC. You have to take that question.
Yes. You see me shifting uncomfortably in my chair, looking for where to run to. But honestly, we have started something in this space, actually. So we actually have an SME desk. It's whether it is as vibrant as it should be. I have to confess it's not as vibrant as it should be, but we know we have to give back to society. So it's not all about profit every day. We also need to think, okay, are there SMEs that we can support? And if we can bring them as a group, are there SMEs with opportunity that can grow from being SMEs to become big companies in the future? So it's something we are really looking at. There's a lady on my team, Chioma, that runs that desk. So I'll be challenging her. So some of the things, just to give you other examples of some simple things that you could consider from a structuring perspective. So if you run a salon, for example, right? And your revenue is 30 million, right? But you use people, the stylists that provide the service, you use them and they charge you a salary. You can actually change from a salary structure to a joint venture structure such that their revenue is shared off that 30 million. And once your revenue is below 25 million, you'll be exempt from companies' income tax, because the tax rate for companies with a revenue of 25 million and below is 0%. But some people would, recognize the full amount as gross income, as their revenue, then take out those costs as expenses. But if you do a revenue sharing, model, it will mean that they will take their share of revenue, and your revenue is less than 25 million, and then you don't pay income tax, for example. So that's just a simple example, but happy to talk further when we make this desk vibrant.
Yeah, that's a very smart one that you talked about there, that you can very creatively reduce your revenue by doing exactly the same thing that you would have done in a different approach, where you need to pay tax and not having to pay tax. I know that I'm really looking forward to another session where we're going to be talking about on tips as to how to manage taxes. There's also a lot of lack of education around there, and I'm very excited that you're helping to wrap up this session with that particular tip to SMEs, whether you're in service or whether you're in a production. There are creative ways that you can structure the way you pay your people, the way you run your business, and at the end of the day, you are minimizing the amount of tax that you have to pay, and you're very much in line with the tax provision. It's been a very awesome time engaging with you. I've also learned a lot just listening and engaging with you. There are quite a lot of questions, I must tell you. I'm not able to take all of them because we do not have a lot of time. But I will say to everyone who has dropped in one or two questions, so please send your questions to the SME Help Desk. I think my colleague would probably be posting that on the comment section. The SME Help Desk is that email, and we'll be able to take all of your questions. I saw a lot of questions on Alert. I saw a lot of questions on from Q. I saw questions on debit cards. We'll be happy, very happy to be able to respond to all of that. Today, we've been able to touch on a very topical and hot issue that is impacting all of our SMEs. And we thought that as an SME-friendly bank, that we need to be able to provide that education. So that I have to emphasize that this is part of our capacity building, education provision to our SMEs to help them better understand, better manage, and be educated on some of these little tips that would help them give them an edge in the market. And that edge also helps them to be able to cushion the overall impact of the challenges that they may be experiencing from the fuel, the subsidy removal, the electricity tariff that would also be, I mean, I know that the conversations are going on, but that's something that is hanging over our heads, everyone's head. But no matter how challenging it is, we're just saying that we're here, with you, working with you all the way, engaging with you, showing you how you can pivot the details that are available, on your part, and helping you to be able to land profitably. So, Kenneth, I'm grateful. Wema Bank is very grateful to you. We'll look forward to many more opportunities to work with you, partner with you, possibly even on that SME Desk that you've talked about. So we can work, collaboratively with your team member, Chioma, and help provide a world-class service to our SME Desk. And I like that you said you're giving back. So that who knows, we just may be able to get that from you for free.
I knew you were going to throw that in.
So thank you so very, very much. We're grateful. Thank you. And thank you very much all of our audience that have taken time to attend this program. I hope that it's been very insightful, useful. We'll appreciate that you give us feedback. Like I said, many more questions, and we'll be able to respond to you. Thank you very much, everyone, and enjoy the rest of the day. Thank you. Bye.